The last time you were on, we were talking about how things are going to go south this summer, leading into the fall. And I wanted to ask you, and I'm sure everyone's wondering, are we still on track for everything declining, crashing, starting, I think you said sometime around August or so going forward? Are we still on track?
Absolutely. Yes, we are. Last we spoke, we have an interview or presentation that I did, and in our talk that we've done, the key thing that we were talking about was events that are going to transpire in the month of October, and that was October 2nd. But that specifically is a lead up to event. But before October 2nd can arrive, you have to have calamities. Okay?
Yes.
And when we spoke last, we have this time factor of last July 20th, did an interview with True News, and to the exact day we forecast a top. Now, off that top, if you go a year forward, that would be now, July, because what, today's the 8th of
Yes.
July. And so we're at this point now where the top came in, and just for fun, this is some charts that I gave in my stock index update, but I wanted to show you them. I don't give the dates that I have in the future, but these are charts that are fun as heck to look at because, you know, I find it truly enjoyable watching TV. Not that I watch a lot of TV, but when you watch the TV sometimes, you know, you see the newscast, all you see is CNBC, Squawk Box. You see all the reporters talking about how wonderful things are, right, David?
Yes, that's all they keep talking about.
It is amazing out there. Everything is fantastic, okay? Well, let me show you some charts that might scare you or your readers, because this is really what's about to happen. And the charts, this is reality. This is just not someone's opinion who's on CNBC saying, hey, this is what I think is going to happen, okay? These are numbers, these are charts, this is reality, what has transpired since the exact top that we called on July 20th of 2015, okay? So check this out. This is pretty interesting. But before I do this, I wanted you to look at so what we've got here, this is an 8-year chart. Now, this is an example, David, okay?
Mm-hmm.
You see from this low right here, the markets travel upwards, and they form what's called a wedge.
Yes,
okay?
I see that.
So I know you're an analyst, so you basically know what I'm talking about, but just just trying to keep it simple for the general listener. But what you're looking at here is a wedge, and a wedge is basically faith and confidence, okay? So what happens when it'll hit a top, and then it makes a final high, and then it drops, okay? Well, what that point right there is, that's called a break in faith and confidence, okay? So if you think about what happened last August when the Dow fell over 1,000 or 1,500 points in one day, I'll show you the charts in a minute, but basically it broke. And ever since then, everybody's been debating, you know, is the economy okay or is it not okay? But basically, everything's been in question. Why? Because faith and confidence technically broke last year in August. And all that's happened is 1, 2, 3 highs. So typically what happens is you get a triple top formation and then a crash. So you'll see 1, 2, and 3. Now let's scroll down here. Okay, so what does that say right there? What is that? That's Switzerland?
Switzerland, yes.
Okay, you got 1, 2, 3. We're going to go a little lower. We're going to go to Japan. 1, 2, 3. And then let's pull up, here we got Australia. 1, 2, 3. And then there is Germany. 1, 2, 3. And there you got, what is this one here? Hong Kong, 1, 2, 3, okay? You'll notice that some are higher up, some are more lower down, but it doesn't change. Wedge break, triple top. It's more weaker market, Hong Kong. And then if you go, you can pull up the S&P, for example. Here's the S&P, okay? So what do you got there? You've got, hold it here for a second, a stronger market. Why? More money printing, right? But it's the same thing. 1, 2, 3. Okay, so nothing's great about the U.S. Just the markets are higher relative, like compare the chart to Hong Kong. Next, let's look at the chart on London. Same thing, and then you look at the chart on Toronto. 1, 2, 3. Point is, David, faith and confidence broke last year, 2015, across all the world markets, and all that's happened since then is a debate. whether it really broke, whether everything's okay or isn't it okay. That's all it is. It's just a debate. But everybody who says things are going to go up, they're all wrong, okay? Because the charts are not lying. They're actually 100% accurate, and they clearly illustrate that what happens is once you take a triple pattern like this, okay, and you triple top it, the next is a collapse.
And when do you see this actually beginning? Like when is the start point of the collapse? Does it
Now,
right
here.
now?
We're here. Anybody who thinks we're going to get out of summer here, we're in the U.S. This is summertime. If you think we're going to get out of summer without seeing one heck of a storm hit our financial markets, I think you're wrong. Because like I said, the calamities have to happen before October.
Okay.
And so we have calamities, which is the world stock market crashes. We could talk about the dollar to say basically a dollar crash. So all of these calamities happen. I basically said gold's going to have limit up days. Okay. Well, when you see markets collapsing, guess what gold and silver are doing? They're not having silver's not having a 20-cent day. I promise you that. Silver's having a $2 day, a $10 day. Okay. But you're not going to see these little manipulated moves where silver moves, fractions of a penny or a penny each day. So the calamities are going to occur between now and into October, and then October, I basically see a new paradigm rising from that time point.
Since the Brexit, has this accelerated anything, or has it slowed, or has it affected your analysis of what is coming?
Not at all, because and here's what I just let's talk about gold in regard to that question that you just asked, Brexit, okay? Because this is every time gold goes down $20 or $30, everybody comes out of the woodwork. Oh, gold's going to $700. You know that, David. It's just like it's just insanely crazy on the internet. Everybody who basically says gold's going up is insane. So therefore, I must be crazy. And anybody who says gold's going down, well, they're all right. Okay. Well, just like when I called the bottom on December 3rd, to the exact day, schedule an interview 2 weeks in advance to call the bottom. But no one else in the world did that, right? And then I was at that time, it was like, no way, it's going to $700. So basically, the thing about truth is people are going to realize, hey, that person, that's crazy. That's not the bottom. No way. But it ends up being the bottom. Then the next thing happens is people start debating whether it is the bottom or not. Okay. Well, now for the past 6 months, it's been the constant debate. Is the bottom in or isn't it in? It's just a constant debate for 6 months now. Is the bottom in or not? And then so back to the Brexit question you asked. So gold went up into May, into the beginning of May, and then it dropped all of May, and it came down to the low, which is about 1,200 at the very first day or the very beginning of June, June 2016. Okay. Well, remember at the time, go back, check internet postings, go to the different websites, and you see everybody, the great analysts are all calling for, again, $1,000 gold. When gold is back to $1,200, everybody's calling for $1,200 gold. That was an entry point, and we all went long. Okay. It went long, it went up to the middle, and then it dropped back down. And we had an entry point right before Brexit to go long again, and then it shot straight up. Okay. So basically the Brexit, see, like I say, cycles precede events. So if you understand and know where you are in a historic cycle, because all it is life replays itself with historic cycles. But you need to understand which cycle is playing itself currently based on history. And so the historic cycle that we had basically was forecasting an up move right at the Brexit time point. And I didn't know that at the time it was going to be Brexit, but then sure enough, you find out it's Brexit, and then gold jumps up in price. Okay. But ever since then, here's I don't know if you want me to show me a gold chart. This here.
Yeah,
let's show you. Okay, so here I show this on Greg Hunter because this is like a very, very cool chart to look at. What you're looking at here is that was like an 8-year chart that starts in the year 2009. Okay, so we're way down here in gold, and gold shot up here. Notice it's above this green zone. So this is a bull market in gold, all in through here. Okay, this is 2011, $1,900 in gold. Basically stated a bull market until it collapsed.
Yes.
Okay. And from that time point, it never came back and even touched this. This is the 600-day daily moving average. Never came back and touched it ever. Okay. And so once it came up, it broke here. This is where our interview was, the exact time point with Greg Hunter in February. Okay. and it took it out. And my words are very clear: blue skies for gold. Okay, gold is never going to go below that 600-day moving average. And you can go back, and it never closed under that 600-day moving average since February, ever. Okay, and so Brexit was just one of these cycle moves, the last one here, which caused it to jump up. And then we have a little pullback right now. So today is like the 8th of July. So we have a few dollar pullback on gold. But basically, we had an exit point 2 days ago, very short-term exit point for gold on terms of paper. Again, I'm not saying sell gold. Just in terms of paper, there's a short-term exit point and followed by re-entry, like very, very, very soon. Because basically, this is a flag. I don't know if you can see right there. You see this flag pattern right there?
Mm-hmm.
Okay, so we have a low, we have a price rise, and we have a flag pattern. See it right there?
We can see it.
Well, that flag pattern, if we look right here, is right here. That's right after Brexit. I don't know if you can see, but what comes when you break this flag? You see that, David?
Yeah, I see it's going to surge.
Yeah. So you have a vertical price move. So if gold's going vertical, guess what the stock markets are doing the opposite. So when you say how much time do we have left, I can't squeeze an extra month or two out of that chart. So there's no time left. It's here.
At what point will people see gold surge by $100 or $200? I mean, people are sitting on the sidelines. They're saying, okay, I want to get into gold. Maybe it's going to come down. I see it coming down a little bit today. At what point are people going to say, okay, whoa, wait a minute, what is going on here? I need to really start to purchase the physical gold here because it's shooting up. Do you see that point coming very soon, or can you give us any indication of when it's coming?
I have the time point actually I have for that, and I provide that within the gold index. I can't give away the time point, but I can tell you, if you think you've got to wait till August, I don't think so. Let's just say we're here.
So we're gonna see like a increase of gold of like what, $100, $200, or something like that?
Probably more.
Probably.
Again, cycles don't give me the precise price.
Okay.
It gives me a timing point. So we're basically out of time. And so if an explosion is going to happen, it could happen very, very soon, very soon. And otherwise, it'll be the next cycle wave. So the cycles, I have the waves, and the explosion will happen on one of the waves up. And we've already had 4 waves up already that haven't had explosions. But each wave, if you look at gold since February, high, higher high, higher high, higher high. Okay, so that's a bull trend. Right. And it's all above that 600-day moving average line that I showed you, okay? And so one of these highs, we're going to get an explosion straight through it, and it's not going to be $50 on gold. It's going to be 100 easy, if not more. Okay, so that's kind of where this is headed right now. Silver probably $3 in a day, maybe more than that. Then eventually $10 in a day. But it has to get, we're looking at new all-time highs this year. Okay, so gold is going to take out $1,900 top. With 2,000 tops. Silver is going to take out the $50 top easy, and depending on how quick it does, then it could go to 3 digits yet this year on silver. So silver is going to be insane. But it's just a matter of how quick these targets get hit. And so I have time points into the future, but I don't have price points. But I know that now that this wedge is about to break, like I showed you that chart pattern, we should see something large, very quick in terms of price. Very large price escalations quickly.
So while gold is moving up like this, you're saying the market at this time is going to start really coming down. I mean, right now we see the market up again. It's fluctuating. It's moving up. It's going down. It's bouncing around at the top here. And of course, like you said, the corporate media, everyone is out there saying, look, we're going to hit 18,000. It's going to go even higher than that. Actually, I heard someone the other day talking about the market going to 20,000. And what is your take on this? I mean, is the market going to go to 20,000, or are you looking at something completely opposite happening?
Well, I would tell you this. I showed you 9 world markets, and not one of those charts are broken. Every chart has a broken wedge. Right. Every chart has triple tops. Until that chart formation breaks, all I see is everybody in the media who's saying higher prices, they're going to be 100% wrong. Now, if that pattern breaks, so will markets go up higher. but by that time, gold is going to be at 2,000, silver will be like, $50, $60, so that, could it happen? I highly doubt it, considering the chart patterns for an entire year have not broken on any world market. Not one market can you find has a higher high than last year of 2015. Not one. And we have triple tops across everywhere.
Last time you were on, I think you said the markets are going to come down and drop to like 5,000 or 6,000 on the stock market. Is that still what you're saying today, or do you think it's going to go higher, lower, or you're keeping steady with that?
Yeah, I'm keeping steady because basically we've got a triple top formation, and after completion of a triple top, you have a collapse. So we had we called the drop in August of last year, called the drop the early part of 2016 in January, February. We had that one, and then we were supposed to since then have a rise and then steady drops all the way down. Instead, the market rose back up, and it's gonna now made a triple top. Okay, so now that that's complete. Now we have a failure or a collapse straight down. So we have two lows coming in this summer, so in this here in the U.S. And then after that, depending on how low those lows go, then after that we still have a target of 6,000 on the Dow, 5,000 to 6,000 on the Dow. Will the target get hit this year? It could, okay. But if it doesn't, then that'll push it into next year. But I don't think it could take that long. I think it's going to be sooner rather than later, based on what I see happening to gold and silver. Because the easier commodity to track is gold and silver, and that one is since we called the low last year. Our analysis it just continues to be predictable, and is playing out beautifully. So absolutely, I still see targets, terrible targets. Crash lows. 5,000 on the Dow, and then never recover. Okay, so there's no recovery from that, because after a crash like that, this is a triple top failure. So you've got triple tops in the world markets. Like I don't have it here, but you have one in 2001, right. One in 2008, and then one in 2015. Okay, and that's just a triple top failure. And so now you got triple tops on the yearly going back to the year 2000. You have triple tops on the past year, okay, on the weekly chart. And now you've even got triple tops on the daily chart if you go look at them closer. So basically it's just triples, it's just triple tops everywhere, and not one is proving to be bullish, like it's going to go up. Everyone's, proving the same thing, that they're all going to fall apart.
So while this is happening, what happens to the dollar? Because we're starting to see the dollar, it's still strong against other currencies around the world. And gold is rising and the dollar is still holding steady. While this is happening, what happens to the dollar?
It'll fall. And then once the dollar penetrates 92, it could drop very aggressively, very quickly. And that where we could see gold and silver just shoot. I did the dollar chart here for you and your viewers, but I think you'll love this, or hopefully you will. Big blue arrow. Mm-hmm. You see that?
Yes.
You know what that is?
It looks like the
2011.
Yes, I see that.
You know what happened in 2011 in February? I'm sorry, on April 29th, silver hit $49, and gold bottomed.
Right.
I'm sorry, not gold. The dollar bottom,
right.
And silver made a high. Okay? Everybody thinks that gold moves opposite the dollar. Actually, the beautiful one is silver. Okay? Then, when did silver went up and silver went down and the dollar rose all the way to right here, December of last year, when we called the exact low on gold, and then 2 weeks later, silver's low came in at 1360. Mm-hmm. So what you see there is nothing but a what, David? It's a wedge.
Yes.
Right? Okay. And now you got nothing but the dollar's fantastic. Oh, really? Well, it failed here. That's called a break in faith and confidence. And all you see is dollar trading. Where is that? Between 192 for the past year. Okay, So there is nothing bullish about the dollar. It's trading in a range, and whether the dollar or goes up or not, it's irrelevant. But I basically have a dollar cycle that says it's about to collapse with the stock market. So I see the dollar and the stock market collapsing together, just like they did in August of last year.
And how far is the dollar going to collapse? Like how bad?
Yeah, that's price, and it's harder for me to calculate. So I don't know, but I just know that as long as the direction's down, guess which way gold and silver are going?
Up.
That's all I care about. So
Yeah.
it's irrelevant to watch the daily price movement on the dollar. All I know is that it's range bound and it's about to crack, and gold and silver go vertical.
So as the stock market comes down, the dollar comes down. Here in the U.S., what are people going to experience when all this starts to happen?
Well, again, uncertainty, and there's going to be a lot of when you watch your portfolio crash, and then you find the dollar dropped with it too. And I believe there's probably a bond issue on top of that, because if the dollar drops, like I said on prior interviews, if the dollar dropped 20%, and the world has bonds, you go to sell your bond, what value do you get for your bond that's denominated in dollars? You lose 20%. Okay.
Right.
So how happy is everybody going to be? How the world going to be about that one, right? So if the dollar devalues, bonds are valued in the U.S. dollar, and with the denomination. So bottom line is you're going to have stock crash, dollar crash, and bond issues, and so good luck with so the banking system probably issues and failures, all kinds of stuff. Look what's going on in Italy right now. And that leads into a contagion. And then from a biblical perspective, okay, that's what is written about the word judgment in the Bible, and judgment's a lot of things.
So we're talking about this crash, and it's coming up very soon. What would you tell people to do at this point to maybe protect their wealth, to protect what they have right now?
Well, what you want to look at, again, I can't tell people what to do because that would be advice.
Your opinion.
But my opinion, or what I personally am doing, I think number one is, first off, if anything, I believe these are biblical times. Okay, so I think number one, you need to know who God is, because honestly, if you know who God is, I think everything is less important. Okay, but once you have, once beyond that step, I think you need to prepare financially, and that would be owning physical gold and silver, not ETFs, not SLV, or not these paper things, but real hard assets, gold and silver, having in possession and not holding them in a bank or something. Know them where they are, not paper form, but have them, possession is key. And so that will give you means to transact in the future. That will give you means to not be stuck. Because if you don't have gold and silver and the prices explode, the world's going to immediately have, I've used the word gold fever over and over and over again, but gold fever is basically when everybody's lined up at a coin dealer, buying what they've got in terms of, in their stock. But then you have one guy call up the coin dealer and says, hey, how much you got? And the guy says, I got like 10 million worth of whatever. I'll only use one billionaire or a couple of billionaires to call across, and they buy up everything. There's no physical left anywhere. Okay, so it doesn't take much to have all the physical disappear. So preparing, I'd say, would be making sure that you've got physical possession. And then beyond the third thing, I think, so once you have some physical, then food and water, just in case. I don't know, again, I don't know what the events could or would be, but it doesn't hurt to have, to be prepared.
Do you think for those people, you think junk silver and silver is something good to have, or in small denominations instead of getting like silver bars? Do you think smaller denominations would be better to have?
Well, no, absolutely, that's a great point. Like just like gold, for example, when gold goes up to say $2,000-3,000, right? The thing is that's an ounce of gold, and you could buy a lot with that. So it's the same thing with silver. If you have 100-ounce block of silver, if silver is at $100 an ounce, it's you don't need you can have a few of those, but I think it's better always to start small. Once you got a lot of small, then go higher. They go to the 10 ounces, and then you go to the 100 ounces. But I agree with what you just said. And then junk silver, same thing too. I think when the moment the coin shops, all the physical silver disappears, the coin shops, everyone's going to immediately go to, hey, like I got grandma's got some. some old dishes, out of silver, and there's some knives and forks, so it's silver. So I think that's the last go-to, but it's silver. So absolutely, I think anything silver is going to be is wonderful. But I think if you're starting, I think you should always start lower, so then you can transit. Because again, when the prices do get bigger, if you have a 100-ounce block of silver. At 100, like I said, $100 an ounce, $200 an ounce, $300 an ounce, it's going to buy you too much, and you can't break it down. And it costs the same amount of money right now to buy 100 one-ounce coins than it does to buy a 100-ounce block.
From your, this is my last question for you. For your research, when this system comes down, how long is it going to last where the market stays down, gold is staying higher? Can you predict this and factor this out over time of how long this will last?
Well, sure. I've done the calculations all the way forward. See, gold's got a cycle for years forward. Okay, so no matter how high gold goes this year, whether it goes 2,000, 3,000, 4,000, whatever it does this year, it doesn't matter because it's got a little pullback and it's going to go higher again. So, but the pattern, the up cycle is for years for gold. So if gold's going up for years, the dollar's going down for the next few years, okay? And as that's happening, the stock market's going down for years to come as well too. And so it's just, for years to come, gold's going up, and for years to come, the dollar and the stock market are going down. The difference is, I don't see, the gold and silver, for them to come down, they're going to come down from astronomically big numbers, and the stock market's going to, I think it's years, 10 years probably for the market to stay down if it ever does recover. Because again, from a biblical standpoint, this is the final wave, and on the crash, then all these kind of calamities, and we've read the Bible, if we read Revelation, but basically there's a lot of calamities that hit, and basically it gets uglier. Like you right down to the fact, right down to the point of war and everything else too.
Bo, thank you very much for being on the X22 Report Spotlight. Once again, how can people see your work?
My website, gold2020forecast.com. If they're looking at, if you want to get dates, we have a gold index, stock index, we provide that. But also, like most recent interviews, like even today's interview, where our YouTube channel is awesome too, because that's just put my name in Bo Polny, or just my Gold 2020 Forecast at the YouTube, just do a search, and we come up right there, and that's great too, because all of our videos are there as well too. So so that's basically the best way to reach us, and I really I wish everybody all the best and and a wonderful year. But I really hope that people listen. I really seriously hope people are prepared and have done something, because I think what's coming is going to be just these will be biblical times that are about to hit us, and I think people really need to be prepared and just not hope everything's going to be okay, because it says in the Bible, prepare.
I agree with you. I've been telling people to prepare, and I on the same track as you. I see things going south the latter part of this year, and I don't think it's going to be good for anyone unless you're prepared and ready for it. Bo, once again, thank you for being on the Spotlight.
Thank you, David. Have a wonderful week, and God bless.
You too.